Hello friends, I am CA Geeta Smriti and our topic for today is TDS applicability when buying a property from an NRI seller. Okay. Under Indian income tax law, whenever any immovable property being land or building or both except agricultural land is being sold to a resident Indian and the seller is a non-resident, he's an NRI, then in that case TDS is applicable. And there is no specific threshold that the transaction amount should be greater than say 1 lakh rupees, 50 lakh rupees, no such threshold. Whatever be the transaction amount, means whatever be the sale price, it does not matter, TDS is applicable. When the seller is an NRI. Please note that when the seller is not an NRI, but he is a resident Indian, then the TDS rule differs. So now we will take a look and understand when the seller is an NRI. Okay. So we've understood that TDS is applicable whenever it is an NRI seller, irrespective of the sale transaction amount. Okay. And what is the rate of TDS? Rate of TDS will be, as for the assessment year 2021-22, is 20% plus any surcharge if applicable, plus 4% of health and education cess in case of long-term capital gain. And it is 30% plus surcharge plus health and education cess in case of short-term capital gains. Okay, when is it long-term capital gain and when is it short-term capital gain? Whenever any immovable property is being held for a period of more than 24 months, then it is called long-term capital asset. And whatever gain will occur on sale of such long-term capital asset will be called as long-term capital gain. Otherwise, it will be short-term capital asset. Means if held for less than 24 months, then it is short-term capital asset, and gain occurring on sale of such short-term capital asset will be called short-term capital gain. So the period, the holding period is important here for the immovable property being land or building. We should be less than 24 months to come under short-term capital asset and more than 24 months to come under long-term capital asset. Okay, so now we know what will be the rate of TDS when it is short-term and what will be the rate of TDS when it is long-term. When it is short-term, then rate of TDS will be 30% plus cess, and when it is long-term, then rate of TDS will be, when it is long-term, then rate of TDS will be, whenever it is long-term capital gain, then rate of TDS will be 20% plus 4% cess plus surcharge. Mostly we see that sale of property, land or building comes under long-term capital asset only because people do hold it for at least 24 months. But this is not a rule that it has to be a long-term capital asset only. It depends again on the holding period. Okay. Now let's go back to our slide, our presentation. Okay, so we've understood what is long-term capital asset, what is short-term capital asset, and what is the rate of TDS on that. Now let's proceed to understand that how the buyer is going to pay to the seller, how the buyer is going to deduct any tax on it, and then make the payment of the remaining amount to the seller. So whenever it is an NRI, whenever the buyer is an NRI, the seller is an NRI, then what this buyer has to do is he has to deduct TDS. We have learned this. How he will deduct TDS? He has to first obtain TAN. What is TAN? TAN is tax deduction and collection account number. So what has buyer got to do? The first step that buyer has to do is obtain TAN. Buyer may also have TAN. If he has TAN, then it's fine. If he does not have, then he has to obtain TAN and then deduct the TDS. Now, whatever TDS the buyer has deducted, what he has to do? He has to deposit that TDS, deposit with whom? He has to deposit it to the government. And when the buyer, suppose buyer has deducted the TDS in month of May, he is making the payment in the month of May. So he will deduct the TDS now, and he has to apply for TAN before deducting the TDS. So he will apply for TAN first, then deduct the TDS, and then he has to deposit that TDS to the government on or before 7th of the following month. Means if buyer makes the payment today, that is May 28th, 2020, then he has already obtained the TAN before making the payment, and now he will deduct the TDS today. Then buyer will deposit that TDS deducted on or before June 7th, 2020. Okay, so we have understood this. Whenever the TDS has been deducted, whenever the payment has been made, TDS is being deducted, and that TDS should be deposited on or before 7th of the following month in which the payment was made and TDS deducted. Okay, now this has been done. Buyer has applied, obtained a TAN, he has made the payment. What is the next step? Next step that buyer has to do is he has to file return of TDS. When will he file the return of TDS? The due date for quarter, the TDS return occur every quarter. So the quarter in which TDS was deducted and deposited, the due date for that quarter ending should be the due date which the buyer also has to follow and file a TDS return. TDS return is filed, and the name of the TDS return which has been filed is 27Q. And when he has to file the return, so now when he has made the payment in May, on May 20, 2020, so the quarter in which May comes is April, May, June. So quarter ending June. Due date for TDS return for quarter ending June is July 31st, 2020. So he has to file the return on or before July 31st, 2020. On or before this date, he has to file the return. And accordingly, if the quarter differs, then the due date for TDS return also differs. And then after filing the return, he has to also provide TDS certificate to the NRI seller that yes, your TDS was deposited, deposited, and return was filed within 15 days of filing of the TDS return. Okay, now there's one obvious question which will come to the mind, that the capital gain would not be the whole amount of sale transaction. So say for an example, if the seller has sold the property for 80 lakhs of rupees, then whole 80 lakh is not capital gain. He must have purchased it also for a certain amount. So the gain amount is definitely less than the amount which has been transferred, which has been paid by the buyer to the seller. So what to do in such case? In such a case, TDS deducted on the sale amount is too high for the NRI seller. And he might not have any other income in India for which he has to file the return and where he can adjust the TDS. So what is the option available to him? In that case, the seller, what seller can do? In that case, the seller may approach the income tax officer to calculate taxable capital gain on sale of the immovable property and obtain a lower or nil withholding certificate and provide that to the buyer. That the assessing officer has allowed me to allowed me to have lesser tax deducted while you make the payment as per the certificate, because my total income which is going to happen in the sale transaction is less. and then the buyer will not deduct the TDS on the total sale amount at the rate of 20% plus cess plus surcharge in case of long-term capital gain, or 30% plus cess plus surcharge in case of short-term capital gain, but he will deduct the TDS as per the certificate obtained from the assessing officer, income tax officer. Okay, now let's also take a look at how to compute long-term capital gain. In long-term capital gain, the price for which the sale happens has to be indexed. So, sorry, not the price for which the sale happens, the cost of acquisition has to be indexed. So what happens in case of the sale, in case of capital gain calculation from long-term capital asset is, it has been indexed. What we take is the cost of acquisition, indexed cost of acquisition and sale price, and then we find the capital gain. And how to calculate that indexed cost of acquisition? To calculate that indexed cost of acquisition, we say that cost of acquisition should be multiplied by cost of inflation index, which is being provided by the government income tax department every year. So this is to be noted that indexed cost of acquisition calculation is done by multiplying the cost of acquisition, the value on which the property was purchased, with cost inflation index for the year in which the asset is transferred. Okay, so if sale is happening today in 2020, then cost of acquisition should be multiplied by the CII, cost inflation index of the year 2020. Okay, so financial year will be 2020-21, and this whole amount is being divided by cost inflation index of the year in which asset was first held by the seller, or 2001 or 2, whichever is later. Okay, so should we just see how we can do this? Let's take a look. What we have to do is cost of acquisition. Suppose the cost of acquisition, our cost of acquisition is 80 lakhs rupees, like I mentioned. If it is 80 lakhs, sorry, our cost of acquisition was supposed 20 lakh. Then in that case, this is to be multiplied with what? This is to be multiplied with, if the sale is happening today, then cost inflation index for 2020-21. And from where are we going to find the cost inflation index for 2020-21? Government is going to release the data. So suppose it was cost inflation index, if we take a look for 1920, then cost inflation index for 1920 was 289. Let's consider that this is only the cost inflation index for 2020-21 also. So let's consider 300 maybe. So 300, and this whole figure, this whole sum should be divided by what? This whole sum should be divided by, if we go to our slide, you will see this whole sum should be divided by cost inflation index of the year in which asset was first held by the assessee, by the seller, or 2001-2. Why 2001-2? Because as per the new cost inflation index, base year has been considered as 2001. So if it is purchased after 2001-2, then it should be cost inflation index of the year in which it was actually purchased. Say if it was purchased in 2002-3, then 2002-3, or if it was purchased before 2001-2, then cost inflation index of 2001-2, which will be 100. Okay, now one thing is to be noted here, that let's consider that this one is this has been purchased in 2001-2 only, so it will be 100 divided by 100. So this whole amount, 20 lakhs into 300, should be divided by if it was purchased in 2001, 2, it should be divided by 100. This will give us what? This will give us the indexed cost of acquisition. Okay, now what if the property was purchased before 2001? Then the seller has two options. Either he has to go for the valuation of the property as on 1st April, I will write it here. He has to go for the valuation of property when as on 1st April 2001, or he has the option to take the value of the property as per his cost of acquisition. So whatever be the property, his real cost, he can take the original cost. Either he has to get the valuation of the property done as on 1st April 2001, or he can take the original cost of acquisition also. Now we have understood that how this works, this indexed cost of acquisition. So this indexed cost of acquisition or an indexed cost of improvement, for calculating the property, we also consider the indexed cost of improvement, whatever we had spent to improve the property. And then we accordingly, when we subtract from the index cost of acquisition from our sale price, then we also subtract index cost of improvement. But it has to be done strictly as per the rules mentioned in Income Tax Act. Okay. Now, this is only in the case of long-term capital asset, the procedure to find the cost of acquisition, which should be indexed. Indexation has to happen because of the inflation, not in the case of short-term capital. Whenever it is short-term capital asset, then no indexation is allowed or required. even if we want that it should be required, it is not allowed. So indexation is only allowed in case of long-term capital asset, and we are discussing in long-term capital asset also here, immovable property being land or building except agricultural land. So I hope it is clear to you now that how to proceed whenever buying a property from an NRI seller. You have to first obtain the TAN, then deduct the TDS, file TDS return, and when you provide the TDS certificate to the NRI seller, and also make the payment to the seller. And then seller has to file his income tax return with the government income tax department. And then if the TDS has been deducted more than the capital gain tax liability, then he will get the refund. This was all about TDS rule applicable whenever buying a property from an NRI seller. Hope you like the video. Do subscribe for further updates. Thank you. Bye for now.